This is a tutorial on Keltner channels used in technical analysis. This indicator centers around an exponential moving average that's often set to a default length of 20. It serves as the middle or center line. Then there will be a line below and above this middle line to form the upper and lower boundaries of the channel. By default, these lines are set to be 2 average true ranges or 2 ATRs away from the center line. So the upper line is 2 ATRs above the center line and the lower line is 2 ATRs below the center line. This construction is similar to the Bollinger Bands indicator. Bollinger Bands differ in that their upper and lower boundaries are spaced 2 standard deviations above and below the middle line. This middle line at the center of Bollinger Bands is also slightly different in that it's based on a simple moving average rather than an exponential moving average. However, it's still also often set to a default length of 20. If you're interested in learning more about Bollinger Bands and average true range, the tutorials on those 2 indicators are already up, so it might be a good idea to watch those before continuing this tutorial. Now for a direct side-by-side comparison, the blue exponential moving average middle line of the Keltner channels will usually only differ slightly from the orange line of the Bollinger Bands. They're quite similar in how they approximate movement on the chart. In contrast, a real big difference will be seen when adding the upper and lower boundaries for both indicators. Because the width of Keltner channels are determined by average true range, they will often be narrower and smoother than Bollinger Bands that have much more drastic contractions and expansions, from being spaced based on standard deviations to better represent changes in volatility. One effect of this difference is steeper movements like this uptrend can tend to have price remain outside the boundaries of the Keltner channel far longer than outside the boundaries of Bollinger Bands. The chart examples in this tutorial will be short but detailed, showing developments related to Keltner channels before, during, and after important events happen on the chart. This will highlight common uses and preferred conditions for the use of Keltner channels, as well as discussing less desirable conditions and showing cases where this indicator could be less effective, or even cases where it fails. Chart examples will be from a wide range of markets, market conditions, and time ranges. So, no matter when you watch this or which particular charts you choose to apply Keltner channels to, general information from this series can be of use to you. An overall visual summary of market direction can more easily be visually represented with Keltner channels. See the broader picture of whether the market is moving up, down, or sideways without lots of additional noise. But note, sometimes this can be very limited in the short term since rapid short-term changes take time to be reflected on the indicator. Another simple use of Keltner channels is similar to Bollinger Bands. It's the same kind of thing looking for a reversion to the mean type movement. Naturally, when contact is made at or outside the boundaries of Keltner channels, the probability of remaining at the fringes of the channel become less likely over time, and often a relatively quick return back towards the middle line becomes more likely. Of course, there won't always be exact contact with a market closing exactly at the middle line or on the boundaries of Keltner channels. There can be some variation above or below these lines as seen here. Just before the chart accelerates up from an established area of support, there's obviously more bullish sentiment developing, so there's less likely to be direct contact near the lower boundary to be seen. Also, closing just above the middle line can become more common in such cases prior to the first direct contact with the upper Keltner channel line, which is a more solid indication of a trend reversal. In this case, reversing to a major uptrend where constant contact at or slightly above the channel becomes more normal. Now here's the opposite situation where after repeatedly contacting the upper boundary of the channel during the prime of the uptrend, where there's a major long-term shift with the first direct contact back onto the lower channel line. Up here is an additional bearish indication some bullish sentiment is still left to drive high over the middle line. The chart gets close, but there's no direct contact back with the upper channel line, which takes place in line with a recent area of resistance, which also happens to be a double top pattern that has finished. Then, as a stable downtrend emerges, there's the expected direct constant contact with the lower boundary of the channel. And whether it's a stable uptrend, downtrend, or a flat trading range, the majority of movement will be cleanly captured within the boundaries of Keltner channels. To more frequently produce these kinds of upswings and downswings directly at the boundaries of Keltner channels to direct the chart back towards the middle line, a stable trend that remains on the chart longer is usually neatly contained in one half of the Keltner channel, in this case staying in the lower half during a downtrend. The chart makes regular contact with the middle and lower lines in such a neat fashion that there can sometimes be the outline of a straight channel. Eventually, when the trend becomes less stable and/or is possibly nearing its end, there's more frequent contact up towards the middle line, and there might even be a few consecutive closes into the upper half. But generally, as long as there's still a bearish advantage, there won't be direct contact with the upper line, and there will eventually be a downswing to carry on the downtrend in a weaker capacity. In comparison to more stable and/or stronger portions of the downtrend, downswings that form more in the upper half of the channel can often drop the chart back towards the lower line, where an upswing can form near, but not in direct contact with the lower line. Now, downswings overwhelmingly form above the middle line, and there's even briefly been direct contact with the upper line. This shift towards more activity in the upper half of the channel indicates major weakness to the long-term downtrend, but not necessarily a major bullish reversal on the horizon, because generally a successful bullish reversal would move to the upper half and break out much faster. Instead, there have mostly been wide horizontal ranges forming, pointing to more neutral to bearish conditions, so it's not too surprising a major bearish continuation takes place following those two more recent downswings much closer to the upper boundary. Certainly, there's a distinct contrast between the flatter, more neutral movement bunching up around the middle line compared to the neat formation of swing points channeling within the lower half of the Keltner channel during well-defined portions of a long-term downtrend. Starting on the next chart, there's an even more clear demonstration that steep, bearish, and bullish movements cannot be sustained for long, especially when they stray further away from the channel boundaries. As the uptrend progresses, there's a pause, a typical horizontal range forms, contacting around the upper and lower boundaries. It's more neutral to bearish when compared to this more recent second pause that remains more neatly within the upper half of the channel. Next, there's a more prolonged pause actually channeling into the lower half. It's a slow, moderate retracement, not steering towards a major bearish reversal. This is mainly indicated by no closes below the lower line. Then you may soon notice, when there are major continuations, there is often the formation of three methods, candle patterns. In this case, a three methods rising candle pattern, first holding solid contact with the middle line prior to the rapid acceleration higher. On this occasion, only incrementally higher highs are reached. This is followed by a quick and volatile return back to the middle line, which the chart also crosses below relatively quickly this time, with more consistent closes into the lower half. Conditions definitely improved for a break below the Keltner channel. As usual, the chart returns back into the channel relatively quickly. If there is to be a solid break below these previous lows, it would be preferable for the chart to keep remaining in the lower half of the Keltner channel. This is certainly not happening. Instead, there's consistent contact into the upper half and even a few upper wicks that break out of the channel. Again, that familiar foreshadowing leading up to the formation of three methods rising candle patterns that strongly break over the channel boundary. Here's a good demonstration of gradually returning back to the channel and sliding up along the upper line, similar to how a moving average can sometimes provide smooth support. Once again, consistently rebounding above the middle line for a stable bullish phase in the upper half of the Keltner channel, allowing for more suitable conditions towards a bullish breakout, continuing the larger uptrend once there are several consecutive closes over the upper line. So there you have it, some of the common characteristics related to Keltner channels during strong and/or stable portions of a trend. By now, we already know closing outside of Keltner channels won't last for long, and reversals become more likely. So perhaps reversals are even more likely when reversal candles form at or outside the upper and lower boundaries. It is indeed the case here where the bullish reversal candles are also part of forming an even larger bullish reversal, connected to a double bottom chart pattern with an incline. Incidentally, the upper boundary of the double bottom runs quite close to the middle line of the channel. Next is also a good demonstration of reversal candle patterns forming outside the Keltner channel and coinciding with a major structure, in this case reaching that clearly defined resistance from previous highs. Naturally, at least some kind of a reversal takes place. The difference here is it's a much smaller reversal than would be expected. And that's just how things work in reality sometimes. There can be confluence among multiple factors, but in some cases like this one, there can be little to no reversal. Though there still is a noticeable pause before there's that familiar breakout that also goes above the channel with movement similar to a three methods rising candle pattern. Now, price is dropping onto an area of confluence in that it reaches the upper 70s range, which again has the middle line of the Keltner channel running close to it. Candles with bullish reversal qualities appear, but the chart is slow to see an immediate reversal for a larger bullish continuation. Overall, the chart is quite flat, but there is a slight incline developing to place lots of recent closes well within the upper half of the channel. So like previous examples, that is what usually happens before the next step when there are consecutive closes over the upper line. Now, if we go back to the beginning of this uptrend and go from the daily time frame to a larger weekly time frame, We can observe a demonstration of confluence across multiple timeframes since some of those earlier upswing points also formed during contact at or below the lower line. The next chart shows similar situations, so it would be more interesting to highlight cases where there is confluence with bearish reversal candle patterns forming around the upper line in price ranges of resistance defined by previous downswing points that ultimately fail to produce any impactful drops. Because the confluence of these basic principles from candle patterns to the Keltner channel and support and resistance ranges help identify areas of higher probability for reversals that realistically won't occur 100% of the time, even when there are favorable conditions like in this example. For more on indicators, as well as Fibonacci methods, follow Ascencore. Thanks for watching and have a nice day.